Well, you're coming near the end of the foundational course. We couldn't have planned for the market to give us a better educational day than we got on September 17th. Almost everything that's really important that we have talked about is presented here in real life form. If somebody asked us to go back and find a perfect educational day, we couldn't do it. This just very fortuitously appeared for us. So let us get started. The first thing we're going to look at, overnight inventory. Now let me review for you overnight inventory. The rules of overnight inventory. If overnight inventory is long, and long overnight inventory is measured from the settle of the previous day. So if the settle from the previous day was at 10, for example, and all the trade that took place overnight was 11, 12, 13 on up, overnight inventory would be long. If all of the overnight trade took place below 10, which was the settle, then overnight inventory would be short. And of course, it never has to be 100% of one or the other. That's just an example to keep in your mind. Now, what is the importance of overnight inventory? If overnight inventory is long and the market doesn't care, generally what happens if overnight inventory is long, there is a counter auction. A counter auction means if inventory is long, then the market will sell off in the morning in order to rebalance some of the overnight inventory. If overnight inventory is long and the market doesn't sell off to rebalance overnight inventory, that's a sign of a very strong market. About 65% of the time, and that's anecdotally determined rather than scientifically determined, the market will have some kind of counter auction relative to overnight inventory. So likewise, if overnight inventory is 100% short, the expectation would be for a rally. If we don't get that rally and overnight inventory was short, that's an indication of a market that is very weak. So the first thing we're going to be looking at this morning is overnight inventory. And the reason for that is that that's what we're looking at anytime when the market opens in the morning. The next thing we're going to be looking at throughout the day is balance. Coming into this day, we had a 2-day balance, which you can see on your left. The biggest opportunities occur when the market trades out of balance. If a market trades within balance, generally you have a very calm day. If the market trades out of balance, then you've got an opportunity for bigger movement in the market. The market's in balance, normally you're looking for a lot of shorter term trades, but very little movement. If you're out of balance, generally you have fewer trades, but better opportunities on those trades. Now, generally it's never clear cut. So if we're out of balance from a price standpoint, so if you look at the 2 days on your left, and we could be out of balance from a price standpoint, which would put us continually down below 2901.75, that would be out of balance relative to a price point. Another way to be out of balance is out of balance relative to value. So we see where the value is for those 2 days. It's pretty close to being overlapping. As we come into the next day following the 2-day balance, we want to see how value is beginning to develop. Now, it doesn't tell you that right away. Sometimes you have to monitor the market and determine where do you think value is going to be. Remember, we trade value, not price. Price is simply an advertising mechanism. Price advertises opportunity, time regulates all opportunity, and volume or price measures the success or failure of those opportunities. So we're always focusing on value. Additionally, we have talked about the continuous two-way auction process. The market auctions orders coming in from all over the world. Many different motivations, many different types of orders coming in from all over the world. Trying to make sense of that, the best way to do that is through an auction process. So the market auctions from low to high, and when that kind of fades, then it auctions from high to low. It's a continuous back and forth two-way auction process. Now, what you're trying to see through that two-way auction process, where is value actually turning out to develop? Price can mislead you. Value is much more stable. Remember, value represents about 70% of the range for a particular day. Value helps filter out a lot of things that are relatively unimportant. So as we get ready to replay the 17th as a great educational day and a review of a lot of the things you're looking at, we're going to be watching very closely the inventory adjustment from short covering, as well as the POC. Does it migrate higher or lower? The POC, there's another word that we like to use, another phrase we like to use to define the POC. The fairest price at which business is being conducted. We want to know if the fairest price throughout the day is migrating higher or lower. You may have price can confuse you a lot. Looking at the POC will help you understand price much better. All right, so you want to study the 2 pages in front of you before you review the market in front of us. Then when it's over, and we'll talk about it as we go, but when it's over, you want to go back and review these 2 pages, and you want to make sure that you truly understand what was discussed in this video. This is a great recap of so many things that we have talked about during the foundational course. Now, it's not all going to be natural to you at this point in time, but this is a day you want to continually come back to. But if you can have a grasp on this day, it will help you out any course we give, any continuation. It will also help you have a much clearer understanding of what is going on in the market on any particular day. Okay, so now let's get started on playing this day and actually seeing what the day looks like as the market starts up. So the first thing we see is overnight inventory is on the right, and you'll see up at the settle from the 14th, and below the settle, all of the overnight inventory took place below the settle. So what that means is that overnight inventory is short. So we know coming into the day, overnight inventory is short. There's a good opportunity or expectation that the market will rally. You'll have some short covering relative to overnight inventory. If you don't get that short covering, that's an indication that the market is even weaker than it might have looked like. So as we play this, watch, knowing overnight inventory is short, as this day plays out, let's see what happens, first of all, relative to overnight inventory. Okay, so the market is open and it's trading within the range from the 14th, and it's also trading within the range from overnight. So Overnight as inventory is short, the expectation is for a short covering rally. If we don't get that, then that's a sign that the market's even weaker than we might have thought. Okay, at this point in time, the market is not out of balance relative to the prior 2 days. We are still trading within that range. The market is still within balance. Okay, right now we're replaying the day at about 5 times the normal speed. And let's speed it up a little bit. Let's speed it up to 10 times, but you know what to look for. So we're going to speed this up a bit. You know what to look for. You're looking to see what the market does early in the morning relative to overnight inventory. So the market's trading lower, still within the range from overnight, still within the range from the 14th. When a market opens within the range from the previous day, you are generally better off to sit it out. Let the market opening within the range from the previous day generally introduces a lot of chop into the market. A lot of traders get cut up very badly early in the morning. So unless there's really a high level of confidence, very often just let the market do its thing early in the morning, particularly when you're on an inside day. So we'll see right now, the market looks like it's got a lot of confidence. You see it trading lower, but notice we're still in the range from overnight. Overnight inventory was short. When the market trades lower in the morning like this, that's probably more inventory getting shorter. Doesn't have to be, but that's one of the things that goes through my head. Traders see, well, prices were down overnight. Their first instinct is to want to, if they saw prices down, their first instinct is to want to trade lower. But we are not out of balance relative to the previous day. We are not out of balance relative to overnight. We are not out of balance relative to the 2 days. Okay, so we're in the first period of the day, still within balance. And keep in mind, now this is playing at a fairly fast speed. Jen, how much time do we have left in the first half hour?
6 minutes.
Okay, so you see in 6 minutes, we're going to change times. We're going to go to B period. Okay, so now the market is looking at the overnight low. So it traded within 2 ticks of the overnight low. Did not take it out. There were traders all there trying to buy the low. It's a mechanical buy, as close to the overnight low as they can get it. So now they failed to take out the overnight low. So now the market's trading back up. You see the white line is the half back level from the morning. Okay, so now if we can stop for just a second, please. Okay, the current low is poor because there are no single prints. So that means there is no excess. It's called a poor low, and the odds are very good that low will be taken out before the day is over. Doesn't have to be taken out right now, but it's one of those things that the odds are pretty good that it will be taken out. So far, we have not had a counter auction relative to overnight inventory. If we don't get that counter auction, then you want to record that this market is relatively weak because you didn't get that correction for overnight inventory. And that's an indication the market is fairly weak. Okay, let's continue to play. So we're into the second half hour period. We have a poor low, meaning there's no excess on the low. That means no excess, means there's pretty good odds that will be taken out. You see those odds playing out, the market's, there you see, okay, we said pretty good odds would be taken out. Now it has been taken out and the market's trading, there it goes, it took out the overnight low by 1. Okay, so now we've traded below the overnight low. the market, traded below there. No real follow through. It's coming back into the overnight range. Notice we are still within the range for the 14th. So the market is not out of balance relative to the 14th. Notice, if you can stop for a second, notice that the B period high is right at that white line, and that white line represents half back. When a market goes exactly to half back, a very mechanical reference, that is a sign that the selling there that kept it from going through was of the shortest time frame. It's a relatively weak reference. Okay, let's continue to play. So that's called half back. When it went up to that half back level, we just refer to it as half back. Okay, the market's coming back down. We're still, remember, we are still within the range for the previous day. So the market is still within balance relative to the previous day. It is still within balance relative to the 2 days. Unless the market comes out of balance, the opportunities will remain relatively small. Okay, so we saw the market go back down, look at the low, see the market come back up. Remember we said that B period high is exactly half back. Wasn't the strongest high because it was such a mechanical level. Now it may remain there, we don't know, but it is a very mechanical level, and that is a sign of, short-term trading money. Okay, so it held a second time. Market's coming back up to that half back level. It's the second time or so we've been up there. So we're now, how much time is left in B period?
Less than a couple minutes.
Okay, so we're almost into the first hour of the day. In the first hour of the day, we are still within the range of the previous 2 days. Now, if we can stop for a second. So we focused on the range of the previous 2 days, but now look at the value from the previous day, from the 14th. The value area is the area shaded in blue. So now we're looking, and we are building some acceptance into the value area from the previous day, but we're also spending a lot of time below it. So the chances of getting at least overlapping to lower value have increased. And that's one of the things that we're always looking at to see what kind of value are we going to get. Overlapping value, overlapping to lower, clearly overlapping. It's a very important concept to keep in mind. Okay, let's continue to play this day. So we have a poor low once again because there's no excess, no single prints. It takes 2 single prints to be excess. 1 single print tells us the auction is not completed to the downside. We have a lot of single prints in A period. So we got a lot of single prints in A period, still in the range for the previous 2 sessions. Okay, now we're into the third period of the day. Third period of the day, market is still pushing itself lower. But one of the things you want to note in here is how much work this market is to go lower and not getting a lot for it. You also want to remember that that B period high is exactly at half back. So it's not the, so many times people want to only focus on one piece of information. That's not what trading is about. You have to bring a lot of pieces of information into play at one time. That's what it takes to be successful. Right now I'm looking at the high is questionable. and I mean the B period high, because it's exactly at the reference. There's no excess on the low because there's no single prints. We are still within the range from the previous day as well as the 2-day. Okay, now the market one more time is pushing lower. So we're pushing lower. We're pushing at the low for the 14th. And just below that is the low for the 2-day low for the combination days. Okay, we've now traded down below those two lows. So right now, the market is out of balance to the downside. So remember early on, the market, we were focusing on value. And from short overnight inventory, that overnight inventory was not corrected. When it's not corrected, that is a sign of weakness. Okay, so now there was a gap below the 2-day low. There was a gap. That gap has now been filled. If we can stop for a second. Trading is about change. When the market gapped higher to begin with, that was an indication of change or acceleration to the upside. When the market fills that gap, so that is another indication of change. So change going up. Now it's changed again on the downside. So now as we can play. So now the market is one time framing lower, A, B, C. What does one time framing mean? That means if it's one time framing lower, that means that the high of B period did not take out the high of C period, or A period, I'm sorry, and the high of C period did not take out the high of B period. Okay, we filled the gap. We've traded into the lower trading range and without any real follow through to begin with. So the market is, rotating. You see a lot of rotation. Remember the continuous two-way auction process in here. This is a beautiful example. We auction down in C period, end of that auction, then we start auctioning back up in D period, and then eventually we'll auction down again. It's just you really want to get in your mind this continuous two-way auction process. It's not easy because what happens to so many traders? They get too focused on price, and price is only an advertising mechanism. If you're only focused on price, the odds of you being successful are very poor. What we're trying to do is give you a way to see the market differently than most other traders. This is not the way we talk about this, the profile is well known, but the things we look at here are not particularly well known. That can provide you an edge. Okay, so D period is inside C period. That B period high is no longer at half back, but that's where it was to begin with. So now D period has gone to a single tick short of half back. So again, value is building lower, overlapping to lower this morning. The market hasn't got a great deal of confidence on the downside. You're getting a lot of rotation and you filled the gap, but when you filled the gap, you got no downside follow through. You got outside of the range for the previous 2 days, but you didn't stay there. Now you're back into balance. Now we're going to be looking at the point of control. The point of control is the longest line reading from left to right on the profile. So the longest line closest to the center of the range is the ABCD shown in green. Remember, another term for the point of control is the fairest price at which business is being conducted. If you remember it that way, I think it will be the most helpful thing to really have some idea what's going on in the market. So for example, the day we're playing here, the point of control, or the fairest price at which business is being conducted, is substantially below the fairest price for the previous day. Okay, so the market now we're now into the fourth half hour of the day. We're still getting one time framing lower. Now we're changing time periods again. One of the things we want to look at now, okay, is Does that point of control migrate higher? Does it migrate lower? Remember, if you think about it as the fairest price at which business is being conducted throughout the session, does the fairest price migrate higher or lower? All right, so now we're now getting further along in the day, and you can see the market is really struggling to go lower. Yes, you can say, well, it's gone lower in A, B, C, D, E. None of those highs have taken out the high from the previous session. And you say, well, it looks pretty sturdy to me. Well, it's doing a lot of work on the downside. Yes, value is building lower, but we filled the gap. We traded below the 2-day trading range, but we didn't hold it. So this makes it this is a difficult day to trade because there is a tremendous amount of uncertainty in the day. A lot of times, if it's really weak, you break below the 2-day range and you really start to accelerate to the downside. You fill the gap and you accelerate even lower. So it's very easy to misread this day. But if you sort it out, there's all kind of things going on. But let's focus on value. Value is building as overlapping to lower relative to the previous session. Okay, so now we watch this market trade, look at the point of control. The point of control is, one more time, it's a half point, one single tick below half back. That's not you really want to see the market elongate here. When I look at a market like this and the point of control, it's migrated lower this morning, but it hasn't migrated lower substantially with the price. When I see that and it pushes like that, one of the things that goes to my mind is the market getting too short? Now, we're not going to know that till later, but when I see that, the thought goes through my mind, is the market getting too short? And then the question, if we can stop for a second, the question always comes up, and it's a good question. Well, what do you mean by the market getting too short? How do you know if the market is getting too short? And it's a great question. My answer very often is not very satisfying. And it's via experience. You ask yourself, okay, there's traders in the market. If the market were really weak, really weak, we would have gotten below the 2-day range and really started to extend it lower, and particularly after we filled the gap. It didn't do that right away. So the market's weak because price is lower, but what we really focus on is value. Value is building overlapping to lower. Then we've got a point of control that, it early on was up at the golden, you see the AB where it's golden colored at the B period? If we could point at that, that's where the originally point of control, because remember that was half back. Now the point of control has moved down to ABCD, longest line closest to the center of the range. So we've had some migration down, but it really, the market hasn't given way. So it's not a particularly easy market to read, and they're not. Well, we said it's a perfect educational day, and if everything happened without, some of this confusion, it wouldn't be a perfect educational day because markets always have confusion. Okay, let's continue to play. Continue to focus on value. Value continues to develop lower. The market is currently one time framing lower, but D and E period match. One time framing stops if E period takes out D period by 2 ticks, not one, but by 2 ticks. The fact that D and E are exactly the same, and the fact that A, B, C, and D are 5 wide, if we can stop for a second, tells you that this market there's trading lower. The point of control is well above the low for the day. In fact, the point of control is at the halfway point of the day. But yet, The lowest price is substantially lower, and we're not getting a lot of follow through. When this happens, you've got to start to question, is the market getting too short? And you get that experience by watching the market, and you're watching the way it trades, and you're watching to say, okay, it keeps pushing lower and lower and lower. Is it taking the POC with it? Well, it did a little bit, but it really now it's 5 wide, A, B, C, D. So, again, there's no exact definition. You gain this through experience. But when I look at this, I'm saying, I've got an uneasy feeling the market's getting pretty short in here because that point of control's not migrating lower. Let's go on and see this day play out. So remember, I think we're 10 times the speed. Is that right?
Yes.
Okay.
Want it faster?
Okay. No, that's fine. So now, look, you've got D and E. Now notice that F period is only 1 tick below D and E. Okay. Again, very mechanical selling. Okay. Now D, E, and F are all the same. Let's stop one more time. When I see that and exactly 1 tick below half back, I look at that and I say the chances of that being taken out are very, very good. Okay, let's continue to play. I'm sorry, let's stop one more time. I want to add one more thing. If the market is to go lower today, more than likely, the market is going to have to rally first. The DEF matching highs tell me that the market's being sold short by very mechanical day time frame traders. They are the weakest traders in the market. They are the traders that are most easily scared out of their position and reverse their positions. Very mechanical. It's non-thinking. If you think about this, goes exactly to the same level. It's 1 tick below half back, and the D, E, and F match. Does that take a lot of thought to do that? No, it's very mechanical selling. Now you look at A, B, C, D, E, F is 6 wide, and you're getting nothing to the downside. When I see things like that, when the market is being sold below the fairest price of the day, that's a very good sign that short traders are getting short in the hole. Short in the hole means they're getting short at bad prices. In other words, to get short, you have to sell. So they are selling futures below the fairest price of the day. And you usually don't make a lot of money by selling below the fairest price of the day. All right, let's continue to play. Remember, we think there's very high odds that that point of control and the matching DEF highs are going to be taken out before this session is over. Now, these are things that may help you start to think about what you might want to do from a trade standpoint. Do you want to be long, short, flat? And remember, not having a position in the market is a legitimate market position. Okay, so the market continues to trade lower. The more it sells off down here, below the fairest price of the day, the shorter the market is getting. In other words, the more traders are getting short at bad prices for the day. The more they get short at bad prices, the greater the odds that the market will have a short covering rally. Again, you learn these things through experience. Sometimes we say a market gets too short to go any lower. In other words, very often if a market's too short, if it's going to go lower, it has to rally first to get some of those shorts out of the market. Those shorts that are not strong shorts, they have a tendency just to buy every break, so the market doesn't really get a chance to go much lower. Okay, so now you can see we're 6 wide up here. E period was inside D. D was inside C. E is inside D. F is inside E. So this is very balanced. The more balanced, the riskier it is to be in the market. Okay, so we're continuing to play. All right, now hold on just a second. remember, we talked about the odds. We kept talking about the odds of that market coming back up through the halfway point and pass back through the DEF highs. I said sometimes you'll use that to make trade decisions on short-term trades you want to do. Well, you probably didn't want to be short. The odds of being short were against you because the chances were the market was going to rally. So you probably wanted to be, either no position, or maybe you wanted to have a short-term trade to the long side. Again, we're not trying to tell you where to buy or sell. We're trying to give you ways to think about the market. All right, so now F period has taken out the A, B, C, D, E, F level. Okay, let's continue to play this day out. So we thought we saw a short covering rally coming. We got a short covering rally. Now you get the short covering rally. Now you want to see what happens up here. Did you have anything more than short covering? By short covering, sometimes the market's too short to go any lower. So you have to get some of those shorts out, then the market can go lower. Was that what happened here? Did we get a short covering rally that adjusted some of the inventory and allows the market opportunity to go lower? Again, there's no easy answers to these things. People would like to have easy answers. They don't exist. But right now, if we've been focusing on value all day, we're getting later into the session. Value is lower. It's overlapping a little bit, overlapping on the high, but you're not getting overlapping value. So the value is pretty much almost all lower today, not 100%. But so you're not seeing any real strength in this market. When you see this happen, you got to say, okay, we've broken below the 2-day range. We've filled the gap. What are we dealing with here? So value is lower. Value is lower. Generally, what you want to do, you want to sell rallies. You want to take profit on breaks. In other words, you want to trade in the direction of value. Not the direction of price, but in the direction of value. So with value being lower, a lot of times you want to take your profits on breaks, put the trade back out or put the short back out on rallies. And I'm talking about very short-term trades in here. Okay, so the market continues to trade. We're hovering back and forth. So we've looked above that. We've looked above that halfway level. And we didn't get any downside. We didn't get a real upside follow through. All we got was some adjustment of inventory. Got some adjustment of inventory, but we didn't get any real follow through to the upside. So the market's a little uncertain in here. It's not sure what it wants to do. It has stopped one time framing. It stopped one time framing when it went above the E period high. Now we're into G period, and now we see what happens around that point of control. Okay, let's speed it up a little bit. Let's go to 15 times. So we're going to be playing this out pretty quickly, but we're showing you the things I wanted you to focus on today, or we wanted you to focus on. Okay, so now following the move above the area that we thought would be taken out, the market is pressing to the downside again. Value remains overlapping to lower. Getting a lot of remember this continuous two-way auction process? You're getting a lot of that going on in this market. This is a particularly difficult day to trade because you're getting a lot of rotation. Okay, now look at there's other levels now that are as wide as the original point of control. So it is now possible for the point of control to go lower today. We don't know if it will, but if you got range extension to the downside, let's stop for a second. With the point of control a tick above the current, with the halfway mark, a tick above the current point of control. If the market extends to the downside by an additional 2 ticks, okay, that will lower the point of control by a tick. Remember, it's the closest to the center of the range, but if you go 2 ticks lower, 2 divided by 1, I'm sorry, 2 ticks lower divided by 2, it would lower the point at the halfway mark by a point, by 1 tick. Okay, let's continue to play. We're stop 1 time framing, we're coming back down, and we said that the DEF at one time were inside, went above it. Now we're back to H period being inside. Market's getting later in the day. The later we get in the day, the greater the odds that value is going to remain lower, or at least overlapping to lower. Additionally, values lower increases the odds that you're going to get the market to explore more on the downside. Other significant information: you closed the gap. You traded below the 2-day range. You didn't get substantial, you haven't gotten real acceptance below the 2-day range, but you are getting acceptance. So the market is out of balance. It is out of balance to the downside. Okay, so we're playing at pretty good speed here. We're just kind of watching what happens. Remember, more excess on the high, which never really, all those single prints are a form of excess. Excess and balance are the 2 most concepts you'll ever deal with. Also, that the point of control. The point of control, the fairest price at which business is being conducted. You want to see if that migrates lower with price or not. It's migrated once. Okay, now we've changed periods again. We're continuing to the downside in I period. The market's continuing lower. Okay, let's stop for a second. So we're in I period. We're well along into the day. The point of control is still substantially higher. What's another term for point of control? The fairest price at which business is being conducted. The fairest price at which business being conducted remains up there, and price is going lower. There's additional information here that makes me cautious that the market could still be getting shorter. Okay, let's continue to play. We're what, 15 times?
Yes.
Okay. One of the hardest concepts you have to deal with is how much confidence is there in the day. People say, well, how do I know that? Well, you watch what happens. That's one of those things you get via observation. And you've noticed today that the market's been back and forth through the point of control. We filled the gap back and forth so that we're going to the downside. We're getting confidence to the downside in the point of view that we're taking value overlapping to lower. Now it's clearly lower. But the market hasn't been straight down. There's been rotation. So we stopped, we came down and made a low in C period. But pretty substantial rally, back above half back in F period. Now we've come back and we're rotating more to the downside again. So, but value, remember, we focused on value, and value has, been looking to lower all day long. And if you remember early on this morning, overnight inventory was short, and with overnight inventory short, the market did not have a counter auction, meaning covering to the trade to the upside. Okay, so now you can see the market that's a pretty good rally in I period. So the market, this continuous 2-way auction process is still here. The market continues to show a questionable level of confidence. There's a lot of rotation, and it's not a great deal of confidence. Filtering it out, values are clearly lower. Okay, so HI, we're getting along in the day. We want to see now, can the point of control change? Notice what happened on the I period range extension. What did the I period range extension due to the point of control of the fairest price at which value was being conducted. It lowered it, not by much, it lowered it by 2 ticks, but it did lower it. So while value is lower, the point of control or fairest price at which business is being conducted is also migrating lower. Now, the migrating lower so far isn't anything to say, wow, that's huge, but it is migrating lower. Okay, so now a lot of rotation in this market. The day is not over. Confidence is not high. If confidence was high, you'd really see the market break. Now, we've got another chance for the value or for the point of control to migrate lower. We don't know if it's going to happen because we're early in J period, but right now, as of this moment, if it stayed right here, the point of control would migrate lower. Value's lower, point of control has migrated lower a couple times. So we're still watching the day play out. Okay, point of control moved a little higher there, but it's still, a migration lower from the previous. We're showing you an awful lot of things to keep track of today. And you may shake your head and say, wow, this is too complicated for me. But we can stop for a second. What people do a lot of times, they look at what we're talking about here and they say, oh, that's just too complicated for me. And they go back and they get someplace where they can, buy a system or they can put some lines on a chart and make the market much simpler. But the truth of the matter is, I'm going to guess that probably not even as high as 2% of short-term traders make money. Most people don't know how to look at a market, and they go looking for simplified programs. And there's always people that will tell you that they've got, the perfect system. Well, if it was the perfect system, somebody with a lot of money would have bought it a long time ago and locked it up and used it for themselves. So if you truly want to be a trader, we're showing you the things you have to consider. Never promise you it would be easy, and believe me, it's not, but it is learnable. When you see this for the first couple of times, you just kind of shake your head and you say, oh, but I'll never get there. Well, as you watch it over and over again, you become more fluid with it. And one of the reasons that people take our intensive courses is that we mentor them for several weeks. It's about, 5 weeks for each course. And usually people take, 2 courses back to back with a week or so off in between. It's that constant mentoring and that constant somebody pointing out what's going on, helping you filter through this information that starts to give you that clearer, easier understanding. You want to get to the point where you can look at a market and you say, I understand. Right now, I look at this market. I said, okay, its value's lower. It sold off A, B, C, D period. We had a little rally up, some short covering. And we know short covering because we can get a real big follow through. And then the market started trading lower again. So the day is relatively weak, but it's not what you call a free fall. It's not a tremendously weak day, but when you sort through it, value is lower. Okay, let's go ahead and play out the remainder of the day. So you always want to be thinking, what would it take to raise that point of control? Well, it has to be longer than the current point of control, which you see. Let's open it up to about 20 times. And remember, you're seeing this in high speed, which makes it look a little bit more difficult than it is. One of the things when we go through the intensives, all the intensives are recorded. And we'll take some days that are important, and we can go back and replay them and point out the things. A couple times a week, RJ and Joe and Jen will do a synopsis. It takes them about 6-7 hours to do the synopsis. It's then a 20-minute replay that takes you through the important factors, and you can stop and look at it at any point in time. Okay, so right now, value is being accepted lower and lower. We have a selling tail on top in the A's. We have a buying tail currently in the I period. Does that buying tail remain, or will it be taken out? Remember this market, there we are. The buying tail has been taken out. Now we still have a couple ticks in K period, but remember, all day long, this market has been building value lower. So the trading strategy is you want to take profits on breaks, put new trades out. Take profits on breaks, put new trades out when the market rallies. That's how you trade with value. Okay, and that's what it worked very well today. It worked very well. Okay, so now we're getting later in the session, and the market continues to push lower. It's building, it's finding acceptance in and below the gap. We did hold the breakout below the 2-day balance. But the point of control has migrated lower, which is the signal of weakness. But at the same time, I'd like to see it more. Okay, so we're getting late in the day. We're getting a lot of break in this market, and notice it's coming down to a fat part of a prior profile. Very common. What'll be important when this day is over? We'll look at the overall volume for the session. Okay, how many sessions are left in this day?
We have M period after this, and then the runoff and end.
Okay, so the day is almost over. There's M period. Okay, notice that the market one time frame lower in the morning rallied in F period, probably covering some shorts, and now F, G, H, I, J, K, L, and M are still one time framing lower. Again, always keeping one time framing in front of you is very important, because that will help. A lot of times you get confused by price, but if you look and say, okay, we're one time framing lower, that's a sign that you've got some pretty healthy selling in here. Okay, so we're in the last half hour of the day, and then that'll be followed by a 15-minute run period. But the point of control this point of control has migrated lower, which is a sign of weakness, but it hasn't migrated as low as I think it should for the price difference down here. So I think we're looking at probably a lot of liquidation from the market going higher in the last couple days prior to today. So remember, even on a daytime frame basis, sometimes markets get too short to go any higher or too long to go any lower. And the same thing happens when you're looking at the longer time frame. So the market, when it gapped to the upside, may have gotten too long to go any higher, and the market needed to break to get some of that weak hands inventory out of the way. Okay, so now you're seeing an M&M period, seeing a pretty good recovery. And I think that goes along with my comment about the point of control did migrate lower, so that showed weakness. Value was lower, but the point of control didn't migrate as low as it should have for all the time the market was spent pushing to the downside. All right, so we've talked you through this day. Before you start to look at this, remember you want to go back and review the couple pages we gave you to start with. Once it's over, you want to go back again, and you want to spend a lot of time on understanding this day. And when we, go back and listen to it as many times as you want. And it's a foundational course, so it's an awful lot to cover in a foundational course. It's not where you're going to get most places. But remember also, when you learn to trade, you only get real-time experience in a real market, and you're up against the toughest competition in the world. So foundational course, this is a heavy piece right near the end of it, but you want to study this. You've got the notes. You want to study it. You want to study the day. Replay it as much as you want. If it takes you 10 times, don't worry about it. You want to have a good grasp of what went on. All right, that ends the this session for the foundational course. And we're getting very close to the end. There'll be some wrap up, but this was just a wonderful review of all that you've been presented with so far.